Hey guys, how's everybody doing? Another great day for us. 2 days in a row, especially on the FX side. So I just thought we'd do a post analysis on this euro pound trade. Big day for me, a big day for a lot of you, especially those of you that are doing the coaching program, um, and everybody else that's in the real time alerts. So let's just do a top down and let's just go through the thinking. And we've been trading this really just since pretty much all of October, so it's a good end of month review. And for those of you that are new, I'll just cover a couple quick things. So this is the monthly chart, and when we do our top-down directional analysis, we look at the globe from a top-down perspective, meaning the different areas, different countries on down to different sectors within that country, different stock markets, different um, asset classes and sectors within that specific stock market. If you're looking at equities, if you're looking at commodities. So it always starts from the big picture view and then gets smaller. That's how we kind of analyze global macro. And then we do the same thing on the chart. So you start with the monthly time frame. And I've been saying really since September that we were getting close to a high long term. And the reason for that is I like to use this 2 standard deviation regression channel. I don't have time to go into it on this video, but what's important, I just want to show you, there's specific reasons why I use this. But this is your long-term trend for the euro versus the pound. So just look how far we've come off the lows from 2015. Very oversold here. We're overbought now. Again, this is the monthly level, so this is one of the highest time frames we look at, right? And then the cycle is very high. So this 2 standard deviation channel does a great job on any time frame. So this has been one of the reasons why I've been saying I'm going to build a core short for the long term, because this is a lot of runway to make a lot of money over the next 6, 12, 18 months. So I've been saying that since September. Okay, we go to the weekly chart. And let's actually just walk through this. But we'll walk through this in more detail. I have a couple slides on this. But here we can see on the weekly level we were high on the cycle. Okay, this standard deviation is not good representation since it doesn't have all the data, so you take that off. But a little bit of a contrarian play still. This 8-week moving average is still rising. That's showing you the longer term trend. It hasn't even broken and rolled over yet. But we started to go a little more contrarian up here because of the higher time frame location, which was a good call. The weekly cycles rolled over, and it's actually started to diverge as price has not broken this 8. But I suspect once you break this, you should get a move. If you break the 8, guys, here, you think about a move back towards the 30, and these lows, I don't know what that is, 89.20. Okay, so this is a big pivot this week. We'll see where we close and into next week. But that's my thinking. That's kind of the next longer term target would be 82.90. And you can see here, we're only about halfway through the cycle. This percent D is 47. Okay, you don't really get low within the cycle tier below 20. So there's more room here from a time perspective for sure. When you go to the daily chart, you can see the uptrend, but this has been a long move. All right, and just looking at the pound alone, I mean, we talked about the CFTC position, options and futures positioning was very crowded from the short side. as far as the pound goes. It's already had a nice run, so it makes sense that you're closer to a low in the pound, which is going to be tough for sterling, euro versus sterling, for this to rise much higher. And then I've also talked a decent amount about my overall opinion on the euro, and we're very bearish there. So this all set up good for us to start thinking the other way. All right, and then we could get more into the analysis, but that was my main thinking there. When you look at the daily, again, we'll just go back here. The cycle was starting to move higher, and this was the media like to call this a flash crash of the pound. But this is your exhaustion top, and I talked about that as soon as it happened. As a matter of fact, let's go through that right now. So here, guys, here's a timestamp of, these are the alerts that I'm doing in our active trader room. It's all our real-time alerts for all asset classes: day trade, swing trade, long-term trade. It's pretty much everything I'm doing. And then I show you on the charts, I try to explain what I'm thinking, what duration. This is only $149 a month too. This price is probably going to go up, and I'm not going to be able to cover all the markets because I'm going to be doing this for institutions, and this is the same type of work that they'll pay big dollars for. So you won't find a service like this anywhere else. I mean, nowhere else in the world for $150 will you get all of this type of high-level professional trading, and I'm basically holding your hand through the whole trade. So this is our timestamps, guys. I'll try to go through this as quick as I can. But here we are in euro versus the pound. So we talked about here, reshorting swing trade. Keep it small. The cycle has room to go higher. This was back here at the beginning of October. I said that. Fast forward to the 6th. This pair is still going against us over the intermediate term, but again, this is the long-term core short position, so it's very gradual, it's slow, it's a steady process of building a short. I talked about kind of what I just showed you here in the video. It's the monthly regression channel. There's resistance from 2013, and then I told some of the newer traders, if you are shorting it, just be aware and be prepared that you're going to have to sit on this a while. I didn't want them getting antsy because it didn't go down the next day. Right? This is a long-term short. So again, this took an entire month to play out. Here we are a day later. Actually, the same night that we made that spike high, I think it was in the Tokyo session, I signaled that we're getting close to a top. To the day of the high, I signaled that in the real-time alert. I don't know if you can see that. It's 9 o'clock at night. All right, then we came back and I sold some more. And I said that was probably the highs long term. I'm core short, and we're going to be trading it around. Okay, so that was the 7th. Now, here we can fast forward. Here I actually show you, I resold a piece. This is just 20% of my lot size of my normal full swing position size. I will keep this trading. I will keep trading around this core, again, long-term position, right? I keep emphasizing that, and I'm always telling my traders 20% when you're contrarian, 10 to 20% of your size. All right, and then here, so you can see we were covering, sold well. Now here, I was using this pivot as my risk, and this is what I show you guys how I stop out. Okay, I usually don't take off all my risk, but I play defense when it's appropriate. I just cut 1/3 of my short risk long term because we went above the pivot high of 91. Boom, right there. I don't want to keep this I didn't want to keep letting that run against me. The last million I sold, but I'll put that back on when the timing is right. Okay, so what I'm saying there is that I don't want to let this keep running and dragging this bad position. So if it trades above my pivot, boom, I kill it, 1/3. Okay, play defense, wait and see. Best case scenario, it fails like it did, and I'll get a chance to get back in. The mistake is to be stubborn and let this thing go against you, and guess what? Now, you can see this dashed red line. That was my average cost, and that's a long-term position. That's actually not too bad of a distance between an average cost and where the market is. But as you let that keep running, you can never get back. You're never going to get back in the money with this type of distance between where you're short and where the price is. So that's the type of, this is a type of signal where I say, all right, stop on that, cut your risk, and we'll play defense, and then we'll pick our spots again to get back in. All right, now let's see how this played out. So from there were several other signals when we just went back to trading the hourly and 4-hour. Short, cover, short, cover, short, cover. You can still see my average cost was here, then it came down to here. All right, short, cover. Now up in this area is where I started to get my size back on. I've been building a core long-term short, you know, just constantly reiterating the same thing, guys. I've been saying I want to sell into the 0.9 area. That's here, this whole area. Given another opportunity, especially after we stopped out, I wanted another bounce to get back short. The fact that we couldn't follow through when we should have, and we couldn't get back to these highs, and you ran the stops above here, and then you immediately failed. See this bar down? That to me is very, I don't know what the word is. That's typical of a head and shoulders, right? Here's a shoulder, here's another head, and this is basically a shoulder. But that lack of follow through is telling you that that might be the high. So I wanted to bounce back into this same area. And that's what I'm talking about here. Looking for lower highs relative to the highs from earlier this month. Again, right there. Play this pretty wide, meaning give yourself plenty of room with smaller size, because I want to be a seller all the way back to 91.5. So even at this point in time, this is a longer term play. So I know that I got to keep my size relatively small enough that I can add another million for me or 2 million up here. Okay. It's kind of a long video, guys, so just stick this one out. It's pretty good. And now look. Okay. So this is fast forward. This is where I was starting to get my size on again. Okay. I already went over that piece. Now look, now as we traded back up here, I'm reshorting. I continue to just trade around the long-term core short position. Boom, boom. When the cycles got high, we shorted. This pair is still out of the money on the core position, but I'm getting some back what I sold yesterday. Getting some back meaning I'm covering now. If you short well, it makes 0 sense when you get this type of dip to do 0 action. What the novice or amateur does, or even a professional, they see, you guys see this red dashed line? Look how close this is getting to the market, because I'm selling, covering, selling. I'm getting bigger, so my average keeps moving up. Sold more up here. Now my average is right here. I'm telling you guys, when you're working a position, so many traders, when they get this move, they're still praying. They're, oh, I'm so close. I'm almost in the money. They do 0 action, and then this bounces back on them. And what's happened? You've realized nothing. You've made 0 action, even though this was the right move, because you were high, you came back low, the cycle was low. So not only did you waste your time by covering here, okay, now you've freed up some size. All of this size, here, let me erase this. All of this size that you sold here, if you don't cover here, when you bounce back up, you're not going to be able to reshort as comfortably, because you're going to be worried about a move higher. But when I sell well and I capitalize on that move by covering, guess what? Now when we bounce, I'm completely comfortable. I'm at ease by reselling. I just had a nice trade from here to here. That brings my average cost up even higher. Boom. So that's what I was saying. I'm getting some back what I sold yesterday. Okay, and then that was our latest sell right there. I signaled that, but I don't have a blurb for that. And then guys, today we got the flush. I mean, this is just textbook. I mean, there's so very few people that trade like this. This is why our model works so well. But this was my average cost, and this was red until today, and we finally went in the money. And it was a nice, obviously it was a nice big flush down. We covered here, I covered more. Huge move, I just took 65% back, that was there. We can resell the next hourly bounce. This is one of my traders. He made a lot of money today too. So boom, we covered 500 is all I'm short now, and I came from 2.9. All right, that's how we do it, guys. We were short 3 million up here, covered, reshorted, and then you can see how much I took back today. And then I even said we're going to sell the next bounce, and I resold some. Cover here, resell the next bounce. We'll even resell all the way back to here. I mean, all the way back to these highs. We'll be sellers. All right, so guys, look at this. This was my position, 2.6 million. I had short here. Okay, when I covered here. Then I sold 300 more. I don't know if you can see that. That says 2.9 million. That's what I was short. And then we covered, bringing my delta to 500,000. So we went from out of the money by 9. See, from here to here, we realized this, booked it. When we bounce, I re-short, get a little bit heavier, still out of the money, but boom, when we roll through the average cost, all right, we got freaking paid today, 44 grand, and I'm still open 26,000. All right, guys. So go find me a service that for 150 bucks you can trade side by side like this. Now the full access team that I'm building, this is going to be my core group of traders, and we're going to do this. We're going to be really close group. I'm going to teach you how to work all these positions. You know, I'm going to teach the trading model, risk, analysis, risk, execution. There's so much more that goes into it. All the psychology of trading. But pretty good stuff, guys. I mean, look, we had, let me bring this back up. So of all these trades, okay, there's 15 winning trades. 15 winning trades in here, and we only had 3 losses. And these trades here, I really could care less about because they're tiny positions when I want to get 1 to 3 million on. That's where you're going to make your money. These are losses. Technically, when I stopped here, between here and there, here, here, and there. But look how many winning trades we had. Just working this thing. All right, and then that's the big one when you roll through your average cost. But guys, that's an 83% win rate. Okay, I mean, we're building something special here, so I'd encourage you to join the team. If you're new, here's my website. It's jenkinsrm.com. RM's risk management. And you click here, guys. You can join the chat room. It's free to join. You can ask me questions about what we do. And, you know, the blogs here. We're going to be rolling out some things institutional pretty soon. But but this is what I really wanted to share with you. This is the real-time alert service. It's a no-brainer. It doesn't get any cheaper than that. I did 25 alerts yesterday. We had 10 winners and 1 stop, and about another 5 to 7 signals of positions were still working. But our win rate is 84, 90% a lot of times. And our risk reward is not 3 to 1. I mean, sometimes it's 10 to 1, 30 to 1. We have an add and reduce method. I don't want to get into that. This is cheap. Then I also do a trade the open, which we had today, Tuesdays and Thursdays. We get together. I do a little teaching. We go over some markets. We trade the open, make a little bit of money. Okay, that's really well priced. And then this is the full access program, and this is what I'm most excited about. I've wanted to build this team for a long, long time. It's been my vision why I started the company. And I'm going to teach you guys on the model. Okay, all day Saturday. The price includes training on the model, which in and of itself is worth everything. I mean, it's still a small price to pay, guys, to get in on this program. I mean, I paid 12 grand to learn to trade forex, and I didn't have anybody show me. It was just about how the forex market worked. It was just some slides. It was a one-day event. I didn't have anybody training me. I didn't have anybody to trade with. I didn't have a team. So part of this full access, then you get the real-time alerts, okay? And then we're going to have a 24/7 room. The nice part about the trade the open is we're together twice a week. But this is going to be for when we want to catch the moves that happen before the New York Open, okay? And, I'd encourage you to reach out to me or send an email to support@jenkinsrm.com. And it's not going to be for everybody, and I don't really want it to be for everybody. But whether you're a beginner or, you've been at trading for a long time and you want to take your trading to a whole another level, you're institutional, you're an independent trader, it doesn't really matter to me. I'm just looking for a core group of men and women that want to be serious about this, that are passionate about it. And this is the best way that I know is building a team like this. And we're going to trade. I want everybody on the same page as far as how we view the markets. Then we're going to be having a lot of days like we had today. So anyway, guys, I hope that helps. That was a review of Euro Pound. I'll do another one on the Euro, but it's kind of a long video. Anyway, I'm going to get out of here. I'll talk to you guys in the morning. Enjoy your evening.